Imagine waking up, opening your exchange app and realizing your entire future is squeezed into 3 tiny numbers on a screen. Balance. PNL. Liquidation price. That was me, every morning for 30 days. No fancy setup, no 10-monitor trading desk. Just a cheap chair, a second-hand laptop, and a $100 crypto account that I had somehow convinced myself could pay my rent, my food, my life. Every night, before I fell asleep, I repeated the same line in my head. If copy trading really works, I should be able to live off it, even if I start with just $100. Maybe you've had a similar thought. You see screenshots on X, YouTube thumbnails screaming passive income while you sleep. Telegram groups promising easy money if you just copy this trader. You tell yourself you're not greedy, just smart enough to use the tools everyone else is using. In this video, I'm not here to sell you a dream. I'm here to show you exactly what happened when I tried to survive 30 days by copying so-called pro traders with a $100 account. The lucky wins that made me feel untouchable. The stupid mistakes that nuked my balance. The nights I stared at my phone wondering if ID just proved everyone right who said crypto was a joke. By the end, you'll know what copy trading really can do for you, what it absolutely cannot do, and the rules I wish someone had slapped into my face before I ever hit that shiny follow button. When I started this experiment, I didn't have a secret savings cushion. I had a low-paying job, a brain full of YouTube success stories, and exactly $100 I decided I was emotionally ready to lose. I called it a challenge. Deep down, I hoped it would be an escape. Day 1 felt electric. I opened the copy trading section on my exchange, and it was like stepping into a digital casino where everyone else was already winning. Green everywhere. Plus 230%, plus 415%, even 1,200% in 30 days. Avatars with sunglasses, names like Crypto Sniper, Chart Wizard, Moon King. My brain didn't see risk, it saw salvation. I picked a trader with a ridiculous win rate, almost no red days, and a chart that looked like a rocket. I allocated nearly my entire $100 to follow them and went to bed feeling smarter than I'd felt in months. The next morning my balance was up 18% in one night. My salary had never moved that fast in a month. I was instantly addicted. The first week was a honeymoon. Bitcoin was volatile, altcoins were flying, and my copied trader seemed to be on the right side of every move. Some days I'd open the app and see plus 7%, plus 9%, plus 5% stacked like a staircase. I started doing dangerous math in my head. If I can do this every week, I don't need my job. If I can scale this to $1,000 then $5,000, it's over. I'm free. But the cracks were already forming. I ignored the red days because the green days felt so good. I ignored that my pro was using heavy leverage. I ignored that my entire account depended on one stranger in a market that never sleeps. Around day 10, the tone changed. A sudden dump. One of those brutal candles that liquidate over-leveraged traders in seconds. My phone lit up with position alerts before I could even unlock it. In less than an hour, 3 open trades my trader had taken got wrecked. My perfect green staircase turned into a red waterfall. My $100 dropped under $70. I wish I could say I stayed calm and rational. I didn't. I panicked. I blamed the trader, unfollowed them instantly, and went hunting for a new hero. Someone even more profitable, even more consistent, even more likely to rescue my shrinking account. I found another profile with insane recent returns, hit follow, and told myself I had fixed the problem. The same pattern repeated. Small wins, little bursts of confidence. Then a big red day that erased 3 green days in one shot. Every time the balance jumped, I fantasized about quitting my job. Every time it dropped, I promised myself I'd stop being emotional, and then made the next decision emotionally anyway. In the background, the market did what it always does. Bitcoin ripped up, then viciously down. An altcoin exploded 40% on news one day, and dumped 30% the next when everyone took profit. Social media flipped between, "This is the easiest money ever," and "everything is manipulated." My account was just a tiny boat tossed around by that storm, and I had handed the steering wheel to strangers. By day 20, it wasn't just about the money. I was exhausted. I was waking up in the middle of the night to check positions. scrolling Telegram groups full of flexed P&L screenshots that didn't match what I was seeing on my screen. My balance slid. 52, 48, 43, the lowest point. A friend asked how the challenge was going, and I smiled and said, "It's fine, I'm learning a lot." Even though 10 minutes earlier, I stared at a 35% day and seriously considered rage closing everything and pretending it never happened. By day 30, the challenge was over. I hadn't turned $100 into $1,000. I certainly hadn't lived off copy trading. I ended with a bruised account, a tired brain, and a messy spreadsheet of every single copied position. But hidden inside that mess were patterns. Patterns that explained exactly why things went the way they did, and why so many people repeat the same story without realizing they're playing the same role I just lived. It would be easy to walk away from that spreadsheet and say, "Copy trading is a scam," slam the laptop shut, and never look back. A lot of people do exactly that. But that explanation is too simple, and it lets the most important character off the hook, me. Let's start with the psychology. Copy trading is sold with a very seductive idea. Earn like the pros without needing to be a pro. That sentence feels harmless. It isn't. It quietly tells your brain you can outsource responsibility. You don't need a trading plan. You don't need to understand risk. You don't need to build skill. You just need to pick the right hero and ride their coattails. I loved that idea because it was convenient. My first big mistake was emotional delegation. When I followed a trader, I didn't just copy their entries and exits. I unknowingly rented their entire emotional process. I didn't know if they were disciplined or impulsive, if they cut losses quickly or doubled down into oblivion. All I saw was a pretty ROI chart. I confused past performance screenshots with trustworthy behavior. The second mistake was no actual system. In normal life, I had rules, a budget for food, a rough schedule for sleep, limits for how much time I scroll social media. In copy trading, my only rule was, if the line goes up, allocate more. If it goes down, find someone new. No limit per trader, no maximum loss per day, no criteria for who deserved my capital. I didn't behave like an investor. I behaved like a fan, jumping from celebrity to celebrity. The third layer was environment. Open almost any social platform and search copy trading, and you'll drown in success stories, leaderboard screenshots, $100 to 10K challenges, perfectly timed entries. You almost never see the quiet majority of people who copied at the top, got liquidated at the bottom, and simply disappeared. My feed became a highlight reel that asked, "Why aren't you winning like this?" Instead of, "How many people are losing behind these screenshots?" Then there's how the platforms are built. Leaderboards naturally showcase the most explosive short-term returns. Bucks 300%, bucks 600%, 1,000% in a month. That tends to reward aggressive risk takers, not boring risk managers. Standing there with a tiny $100 account and a big dream, who was I more likely to follow? The steady pleasant 20% guy or the my 900% hero? You already know the answer. Another issue, time horizon. I called this a 30-day challenge, but in my head I treated it like a full-time income test. Any drawdown felt unacceptable because I secretly demanded perfection now. Instead of using copy trading as a tool to learn over months or years, I treated 30 days like a verdict on my future. That mindset pushed me into desperate behavior. Switching traders too fast, chasing recent winners, revenge copying after losses, staring at 5-minute candles like my life depended on each tick, and then leverage. Many copy strategies use leverage because it makes small moves matter. On paper, it looks efficient. In practice, with a $100 account, it turns every position into a cliff edge. A small adverse move with high leverage can slice off a huge chunk of your balance. I was copying leverage I didn't understand, like borrowing someone else's parachute without checking if it was packed correctly. Under all of this sat the deepest cause, identity. I wasn't just trying to grow money, I was trying to become someone else. The person who made it from a small account. So when a trade went against me, I didn't just see 743. I saw my dream self slipping further away. That emotional weight pushed me into exactly the kind of behavior the market loves to punish. Impulsive, impatient, desperate. So no, My failure wasn't proof that copy trading doesn't work. It was proof that handing your money to strangers without rules, in a 24/7 volatile market, while your ego is on fire, is a terrible strategy. Copy trading can be a tool, but it will only ever be as safe, as smart, and as sustainable as the person using it. Here's the part that might sting a bit. Most people who blow up with copy trading repeat the same story. The trader rugged me. The platform is rigged. The market is manipulated. Sometimes there's some truth in that. Traders do flip from defensive to reckless. Some platforms amplify the flashiest profiles. Crypto is brutally volatile. But underneath all of that sits a harsher, quieter reality. Copy trading was never meant to replace your brain. It was meant to reveal how you really behave with money when you think someone else is in charge. We're sold the dream. No time, no problem. Just copy. Don't know how to trade? Just follow the pros. It sounds like freedom. In reality, it's an invitation to surrender responsibility while still feeling like a genius. You stop asking serious questions. You don't study risk. You don't ask what happens if your star trader has 3 horrible weeks while your rent is due. You just tell yourself, I found the right guy, I'm good. One of the biggest lies in this game is, I just need to find the right trader. That's gambler logic. It turns other humans into lottery tickets. You convince yourself that somewhere on that leaderboard is a magical person who will never hit a losing streak during the exact period you are recopying them. That's not a plan, that's a fantasy. Here's the twist almost no one talks about. Copy trading doesn't only copy trades, it copies your character back to you. If you jump from trader to trader every few days, it shows you have no tolerance for variance. If you always max out allocation, it shows you confuse luck with skill. If you refuse to reduce risk after a win streak, it shows you're addicted to feeling up, not to growing sustainably. The same system that wrecks undisciplined followers can actually be a powerful teacher for disciplined ones. Watching real strategies in real time, seeing how different traders size positions, how often they sit in cash, how they react in chop versus trend. If you journal that and compare it to your own reactions, you can compress years of experience into months. But almost nobody uses it that way. They just stare at the P&L and refresh. Here's another unpopular opinion. Trying to live off copy trading with $100 is not just ambitious. It's misaligned with reality. A $100 account is perfect for education, for testing your emotional reactions, for learning how it feels when real money, small but real, is on the line. It is not built to carry your rent, your food, your family's future, and your ego on its back. When you put that much emotional weight on such a tiny stack of capital, you distort every decision. Every small loss feels catastrophic. Every small win feels like destiny. And here's the part people really hate hearing. Losing money in copy trading might be the most valuable tuition you ever pay if you decide to treat it as data instead of drama. Every over-leveraged liquidation is a note about your risk tolerance. Every revenge follow is evidence of your impatience. Every panic unfollow on a red day is proof of how much you fear looking stupid. Instead of asking, which trader will finally make me rich? Try asking, who do I become when I hand over control of my account? And is that really the person I want to be with bigger money? If you're willing to sit with that question, the solution is not to swear off copy trading forever, and definitely not to go all in harder. The solution is to redesign the way you use it, starting from the assumption that things will go wrong, and building your rules around surviving that reality. If I had to restart that entire 30-day challenge with the same $100, I wouldn't change platforms. I wouldn't chase a different, legendary trader. I would change how I play the game. Here's the framework I wish someone had forced me to follow from day one. Step 1. Redefine what your $100 really is. Stop calling it my future income. Call it what it truly is, tuition. This is not the money that's supposed to feed you. This is money you can afford to lose in exchange for learning how you actually behave when real money meets real volatility. When you frame it that way, you stop demanding that every day be green. You stop treating a small red day like a personal attack. The pressure drops, and with less pressure comes better decisions. Step 2. Build hard-risk guardrails before you follow anyone. Write 3 rules somewhere you can't ignore them. Max exposure per trader. For example, no more than 30–40% of my account following a single person. Max risk per trade. Estimate, including leverage, no more than 2–3% of my account at risk on any one copied position. Max daily drawdown. If my account drops more than, say, 8–10% in a single day, I stop copying for 24 hours and review what happened. These numbers are examples, not commandments. The key is that you decide them before emotions show up. Once your heart is racing, you will not invent good rules. Step 3. Treat trader selection like hiring, not hero worship. Before clicking follow, pretend you're interviewing this person to manage the last $100 you own. Ask yourself, do they let losses run for days, or do they cut them? Are their position sizes consistent, or wild and random? Do they have a clear style, swing, trend, scalping? Or is it pure chaos? How do they behave in choppy sideways markets, not just during obvious trends? Are they still standing after several months, or just having one lucky streak? If you wouldn't trust their behavior with a $10,000 account, don't trust them with your $100 just because it feels small. Small accounts train your habits. Bad habits scale. Step 4. Journal both the trades and your emotions. Every time a copy trade opens and closes, log 3 quick things. Result, plunge 3.2%, 1.7%. Context, trend continuation after news, range chop, random scalp. Feeling, calm, greedy, scared, numb. Do this for a week, then look back. You'll start to see patterns. Maybe you always raise allocation right after 2 green days. Maybe you unfollow after a single large loss, even if the trader's long-term stats are solid. Maybe you never write the word risk, only profit and loss. Once you see those patterns, you can build new rules like, I don't change allocation within 24 hours of a big win or a big loss. Step 5. Reduce noise and schedule your attention. Copy trading becomes most dangerous when you stare at it all day. Markets move tick by tick, but you don't have to. Instead of refreshing your app every 5 minutes and feeding on group chats full of FOMO, pick specific windows. Maybe once in the morning, once at night. Outside those windows, you don't touch it. At the same time, ruthlessly mute or exit channels that scream 100x gem, easy passive income, or guaranteed copy strategy. You are training your nervous system to stay calm in front of volatility. You can't do that if you keep pouring adrenaline into it. When I finally applied these steps after my 30-day crash test, something interesting happened. My results didn't become magically perfect, but they became predictable. Losses were controlled. Wins didn't trick me into doubling risk out of excitement. The account stopped feeling like a lottery ticket and started feeling like a laboratory, a place to study both the market and, more importantly, myself. Let's zoom out from technicals and platforms and talk about what was truly on the line during that 100 experiment. It wasn't just the account. It was my story about who I wanted to be. Behind every copied trade, there was an invisible script running in my head. If this works, I'll finally prove I'm not stuck. I'll show people I can make money from anywhere. I'll help my family. I'll stop worrying about every bill. On days when the account was green, that story felt close. Food tasted better. The world seemed kinder. I'd catch myself daydreaming about paying off debt, surprising someone I love, or quitting the job I complain about. On days when a trade blew up, the story flipped. A small loss on the screen felt like a huge loss in identity. The voice in my head didn't say, bad trade. It said, you're foolish for believing this could work. There's a particular kind of shame that comes from losing money in a way you don't fully understand. When you make your own technical mistake, at least you know what to study. When you lose while copying someone else, you feel dumb twice. Once for losing, once for trusting. It's very tempting to cover that shame with bravado, I don't care, or with blame, they rugged me, or with silence, I just won't talk about it. Add on top the external pressure. Maybe you know people who think crypto is just gambling. Maybe you've heard every joke about magic internet money. So when your copy trading experiment doesn't instantly succeed, it doesn't just hurt your balance. It feels like confirmation that they were right about you. That weight sits on your chest every time you press follow. Here's the hard truth. Crypto doesn't create those emotions. It amplifies what's already there. The market is a mirror with the contrast turned all the way up. If you're impatient, volatility will expose it. If you're desperate, every pump will look like rescue and every dump like betrayal. If your sense of worth is tied to your balance, every fluctuation becomes an emotional earthquake. Two people can follow the same trader on the same platform with similar settings and end up living completely different stories. One treats each result as feedback, slowly building discipline. The other treats each result as a verdict on their value as a person, bouncing between euphoria and despair. Halfway through my own 30-day spiral, I had a small, quiet realization that never made it into any spreadsheet. I was watching my balance twitch, 50 wood on 83, 5210, 5097, and suddenly thought, these numbers are not judging me. I am judging me. The market wasn't disappointed in me. My account wasn't mocking me. I was the one attaching meaning to every tiny move. That shift didn't magically fix my P&L, but it changed the way I carried it. Losses stopped being proof that I was a failure and became questions. What did this loss reveal about my habits? What belief was I acting on when I followed this trader? Am I chasing safety, thrill, status, or freedom? And is this trade really serving that? Wins became tests instead of trophies. Can I stay just as calm on a big green day as on a red one? Because in the end, most of us aren't chasing candlesticks. We're chasing security, freedom, respect, and control over our time. Crypto is simply one of the loudest arenas where those desires show up. If you can see that clearly, copy trading stops being just another strategy and starts becoming an honest teacher. A tough teacher, yes, but honest. And maybe the most healing lesson that teacher offers you is this: you're not the only one who has blown an account. You're not the only one who has stared at their phone at 3 a.m. with a knot in their stomach. You're not the only one who has lied to a friend and said, "It's fine," when it wasn't. You are not broken because you felt greedy, scared, or ashamed. You are simply human, standing in front of a very fast, very unforgiving mirror. What matters now is what you choose to do with that reflection. So, after 30 days of trying to live off crypto copy trading with just $100, here's the unfiltered scoreboard. I didn't retire. I didn't 10x the account. I didn't discover a secret list of flawless traders. What I did discover was something less flashy and far more valuable: clarity. Clarity about what copy trading can realistically do for a small account. Clarity about what it absolutely cannot do. And clarity about who I become when I hand control of my money to someone else. Copy trading cannot replace your job overnight. It cannot carry all your financial hopes without crushing them. It cannot protect you from learning about risk the hard way. But it can compress years of emotional learning into months. It can show you how real traders behave in real markets. It can give you a training ground where you can watch both your capital and your character in action, with stakes small enough to survive the mistakes. The brutal truth of this 30-day experiment isn't that copy trading is evil. It is that most of us walk into it, asking it to be something it was never designed to be: a salary, a shortcut, a miracle. If you're still here, listening to my voice at this point in the video, that already puts you ahead of most people. It means you care enough to look beyond the thumbnails and the quick wins. So here's what I want you to do next. First, after this video ends, take a quiet moment and ask yourself one honest question. Why do I really want to trade or copy trade? Not the polite answer. The real one. Is it safety? Is it the thrill? Is it respect? Is it the dream of freedom? Once you name that, you'll understand why certain trades trigger you so hard and why certain promises feel irresistible. Second, if this video gave you even one useful mirror, write about it in the comments. Not just nice video, but your actual story. The time you blew an account, the moment you walked away for a month, or the rule you wish you had set earlier. When you put that into words, you turn pain into information. Third, if you want this to be the start of a smarter journey, not just another hype binge, don't just let the algorithm drag you to the next random clip. Click on the channel avatar, go to the channel description, and explore what's there. You will find links to major crypto exchanges where you can get bonuses and start trading or copy trading. Use them only if you're ready to treat those platforms as tools inside a plan, not as lottery machines. Then choose another video on this channel that speaks to the part of you that wants to be more disciplined, more aware, more in control, not just richer on paper. I'm not going to promise you that watching my content will make you rich. Anyone who promises that is either lying to you or selling something they don't fully understand. What I can promise is this. Every story, every framework, every breakdown you see here will be built around two things that actually matter in this game: your capital and your mind. If this episode helped you see even one part of yourself a little more clearly, then the next one will go deeper. We still haven't talked about designing a full risk plan around copy trading, about protecting your mental health while trading, and about structuring your whole crypto life so it doesn't quietly consume your real life. But that is a conversation for another video. For now, take a breath, close the app for a moment. Remember, you are worth more than your last trade. Your future is bigger than a $100 account. And this story, your story in crypto, is just getting started.